Crypto crashed pretty hard. Sentiment is the worst I've seen it in 6 years. But where there's fear, there's opportunity. In today's video, I'm going to talk about what I'm doing in the current market. Now let's get into it. To start, let's break down exactly where the market is as of the time I'm making this video. And it's fun to doom post and make bear memes and everything, but I'm going to make the case that the fundamentals are actually improving. It's just different. It's different than what we're used to in crypto. And so this is throwing a lot of people for a loop, and a lot of people maybe feel like the situation is worse than it is. So let's talk about prices. I'm not going to sugarcoat it. Prices are not great. So Bitcoin, of course, has dipped, and this is even with Michael Saylor doing some significant buys in this time. So price is down on Bitcoin, and actually, if you look at altcoins, it's down significantly more. So this is others. This is everything outside the top 10 combined, and you can see it's retraced. It has retraced everything since November. It's actually approaching its lows from last year. I mean, it's still above it by a decent amount, but like in terms of the scheme of things, it's relatively close to its lows from last year. And it never actually even broke its highs from 2021 in this most recent run-up, which I think is pretty significant. So altcoins getting crushed, and we're going to talk about what that means for the market in a minute. Don't even get me started on ETH, right? ETH doing absolutely horrible. ETH BTC has basically been down only for years now. And I think ETH BTC is around where it was back when there was basically no DeFi, no NFTs, nothing on ETH. So that's the price situation. And, you know, if you looked at just that, you would say, wow, that's pretty horrible, right? That's not, you know, maybe you don't have crypto and you say, I'm glad I don't hold any. But I'm going to make the case that the fundamentals are actually starting to look better than ever. And I'm going to talk about why this disconnect might be happening. So let's look at some of these fundamentals that I'm talking about that are supposedly so great. So first, we've got real world assets. Those are tokenized stocks, bonds, real estate, commodities, etc. Just passed $10 billion and increasing rapidly, increasing at an increasing rate, right? Some would call that exponential. If you go back a few years, go back to 2023, March, you can see, or I guess we're almost in April now, you can see that it's up around 10x. Go back further to 2022, you're looking at an asset class that's up something like 60x in just 3 years. Like, you know, nothing grows that fast outside of a petri dish, usually. And then you've got major institutions are suddenly very interested in crypto. You've got BlackRock, and there's annual letter, Larry Fink, his annual letter talking about tokenization. You know, this article maybe hypes it up a little, but I went and looked at it, and it truthfully is, you know, takes up a decent portion on the letter, and it talks about two things related to crypto. This is Larry Fink, CEO of BlackRock's annual letter. So first, can Bitcoin eat away at the US dollar's reserve status? It talks about national debt growing. So you're seeing a lot of the arguments that a lot of crypto people use, right? National debt is just getting larger and larger. And by 2030, mandatory government spending and debt service will consume all federal revenue, creating a permanent deficit. If the US doesn't get its debt under control, if deficits keep ballooning, America risks losing that position to digital assets like Bitcoin. I mean, I think that makes sense, right? Because you would say, which national currency could replace the US dollar? There's really none right now that would be in a position to. Maybe some sort of non-national post-fiat currency could replace it. And then there's tokenization, and that's what I want to focus on more. So tokenization, that's taking some asset that's off the blockchain and you record it on the blockchain. And I think this was one of the better explanations I've actually seen for tokenization. So I'm going to read some things directly from this letter. So it talks about the current way that transactions are made. You have SWIFT, the Society for Worldwide Interbank Financial Telecommunication. And it works much like a relay race. Banks hands off instructions one by one, meticulously checking details at each step. That relay approach made sense in the 1970s, an analog era when the markets were much smaller and daily transactions were much fewer. But today, relying on SWIFT feels like routing emails through the And so I like the comparison of tokenization is like email for moving assets, right? I mean, anyone who's actually used crypto to make payments and then tried to go make a payment through the bank, a wire transfer, you realize suddenly how many advantages there are to crypto, right? It's instant. I can send it, and then I send the person a DM, say, hey, I made the payment, or they made me the payment, and you can confirm it instantly. And you can even send the transaction hash, so that way you can prove that you sent it and where you sent it. And so it goes on in the letter. What is tokenization? It's turning real world assets, stocks, bonds, real estate, into digital tokens tradable online. Each token certifies your ownership of a specific asset, much like a digital deed. Unlike traditional paper certificates, these tokens live securely on a blockchain, enabling instant buying, selling, and transferring without cumbersome paperwork or waiting periods. All right, I'm not going to read this whole thing out loud because I don't think many people want me to. I can provide the link to it. However, there's a lot of advantages to it. So again, you can trade all the time. It allows for fractional ownership. So for example, he talks about how private real estate and private equity could be fractionalized and traded in this way. It makes it easier to hold shareholder votes and for everyone's voting rights to be digitally tracked. It also, he says, democratize yield. I hate that word, but it takes away a lot of the friction related to providing higher yield assets for people who normally wouldn't have access to them. That's great, right? And talks about the main problem, identity verification. But the point being, you've got these major players that are starting to get involved in tokenization. And so fundamentals are improving in that respect, and they're improving in a major way. So why exactly is the market performing so poorly despite that? Well, there's a few reasons. So one, tech stocks are getting hammered, right? NASDAQ is down significantly over the past month, and for better or worse, crypto tends to trade as a beta to tech stocks at the moment. Even Bitcoin, which is supposed to be digital gold, it trades more similar to tech stocks. My theory is that Bitcoin, you have some percentage of its value that's like gold, that's probably tied to gold in some way. This is just my theory on this. You have some proportion of Bitcoin's value. Bitcoin's around 82,000, maybe it's $60,000 of the value, maybe it's 70, maybe it's 50. I don't know the exact amount, but some portion is tied to gold. And then you've got a speculative premium on top of that. And when the NASDAQ goes down, that speculative premium goes down significantly because it's trading like similar to a tech stock. And eventually, in the long time frame, that digital gold, that base should keep going up because that's like the fundamental value. But within a single day, maybe it doesn't fluctuate quite that much. Now, the reason to maybe doubt that is that the price of gold has gone completely insane recently. But you could argue that in the weeks and months following the election in November, maybe Bitcoin got a little bit ahead of its value, and now it's just coming back closer to the fair value. So that's part of the reason why things have been down, right? Everything's down. And you've got a lot of concerns about economics. So macro is now a major factor, and that's part of why stocks are down, that and tariffs. So you've got now the Atlanta Fed. I mean, the quarter just ended, but you've got the Atlanta Fed forecasting GDP shrinking in Q1. TBD if we get it in Q2, but if we do, then technically we would have entered a recession. So now you've got possibility of a recession, and then you've also got the fact that there's a lot of other macro things going on. 6.1 million Americans are behind on their mortgage. FHA delinquencies just hit 11.03%, the highest in years. So why aren't people buying your altcoins? Maybe it's because they don't have money to do that, right? Crypto has been fortunate that for most of its history, the economy in the US at least has been pretty good. But if the economy is bad, probably buying altcoins is not at the top of people's priority, which gets me to the next reason why things are down, is that despite all of this RWA stuff, all these cool things, most crypto assets now, most of their value, insofar as they have fundamental value, comes from people buying altcoins. It comes from people buying altcoins and paying fees for that. So let's go through the top revenue generating applications in crypto over the past year. All right, so this is already sorted by revenue. Tether and Circle, okay. Some of that is people holding stablecoins on exchanges. A lot of that is people holding stablecoins to do peer-to-peer payments. So it's kind of mixed, right? I'm not going to say that's all from speculation. Ethereum, all right. So there's some real usage there. There's people using DeFi. A lot of people are using DeFi though. They're buying tokens, right? They're buying NFTs. They're buying different altcoins. They're earning yield. So there's some portion of that is absolutely people wanting to buy altcoins. Tron, actually, I think a lot of these Tron fees are stablecoin payments, not a shill, but like, I don't see a lot of DEX volume is very low on Tron, so there's not a lot of altcoins being bought there. Pump.fun, number 5th revenue generator over the past year. All about meme coin launchpad, people launching and buying meme coins. Solana, tons of Solana revenue, people paying fees to use Pump Fun and other altcoin trading applications. Phantom Wallet, in-wallet swap, buying altcoins. Photon, trading app on Solana, buying altcoins. Pancake Swap, major DEX on Binance Smart Chain for buying memes and other altcoins. Sky, formerly known as MakerDAO. Yeah, I don't think that one is so much for buying altcoins. A lot of that has to do with their portfolio of yield-bearing assets, and so that one perhaps less so. BullX and Trojan, 2 Telegram bots used for buying predominantly altcoins, meme coins. Uniswap, DEX, buying altcoins. Jupiter, DEX aggregator, altcoins. I could keep going on. I keep going on, but you're going to get bored. The point being, if you look at the top revenue generators in crypto, almost all of them are buying altcoins. And it seems to me that what you're seeing happen in the market now is you've got a lot of demand for Bitcoin, even now. That's why it's held up so much better than the rest of the market. You've got ETFs, you've got Michael Saylor, you've got so many major financial institutions have their own products now that they're pushing. So you've got all this demand for Bitcoin, maybe even nation states. And then you've got stablecoin and real world asset adoption happening. And eventually that will translate to the chains it's launched on, but it's still relatively small. And so in the meantime, with the economy maybe not doing as well, and then you have altcoins, and there's a few problems coming together that are really dampening the demand for altcoins and applications that relate to that. You've got the fact that the economy, at least in the US, where a huge number of crypto buyers are, is maybe on the down right now, or at least there's a lot of fear. You've got also the fact that a lot of people were burnt extremely badly in the meme coin cycle. Tons of money was extracted, and I think that really interrupted a lot of the feedback loop that normally happens, where you've got people win big on Bitcoin that gets reinvested in part into top altcoins, top 10 say, then it gets reinvested to smaller tokens. But if a lot of that money gets extracted along the way, then you have fewer people that actually make big wins. And if people don't make as many big wins, it doesn't attract more people to want to get involved. And so then you've got a situation where people got burnt. Maybe they're out of money, or they're jaded, and so they're not buying these things. And there's really no narratives right now that are taking off. And so the question is then, what can you do, right? If you're still interested in crypto, you believe these things I said about tokenization, what can you do? I'm going to tell you exactly what I'm doing at the moment. So the first thing is, even as crypto is kind of finding its footing, and you've got some cool things with stablecoins and RWAs happening, AI is popping off in a major way. You had Studio Ghibli art going crazy this past week. You had it all over X/Twitter, even on some other platforms, because ChatGPT launched this new model, or OpenAI launched this model on ChatGPT 4.0. And it is honestly, like, it's not just good for doing the Ghibli art. It's good for all sorts of image stuff. And it's really good for research and writing, and even some more advanced types of content creation type stuff. But we're gonna get to that. But so here's a stat. Sam Altman said ChatGPT launched 26 months ago, was one of the craziest viral moments he'd ever seen. They added 1 million users in 5 days. Awesome. Now they're adding 1 million users per hour. 1 million users per hour. That shows how crazy people are going through. And I'm going to tie this back to crypto in a moment. So people are going crazy for AI products. And I think a lot of people had kind of like an bleep moment this week where they were like, wait, this can actually do job functions. I know, I've been using AI for a lot of things for a while, but I've definitely noticed over the past week, as I've had private conversations, people's tone has shifted, but some of the functions people are now showing me how they use it for, and the prompts people are showing me, it's getting to a point now where it's like, yeah, this is actually doing work real work that I would have to do myself otherwise, or that I would have to hire someone to do it. I'm not even talking about art here. I'm talking about like writing, like things that I would have to, descriptions for things, in coding, and that's what I wanted to talk about, right? So I think there's a real opportunity now. If you're interested in crypto, you can actually start to build stuff, even if you're not very technical. People are using AI to vibe code, and I've actually used it to make a couple things myself. So I built this custom website. That's a crypto fear and greed index website. I'm still making some improvements to it, but you can see it pulls the fear and greed index you're used to. You can view it for different time periods. It also tracks the sentiment distribution for a time period. So you can see, okay, like over the past year, have people mostly been greedy or fearful? And this is something that truthfully, I had to give some input, and I'm still making improvements to it. But this really didn't take that much effort. It's available at feargreedcrypto.com. And you can start spinning up stuff like this today if you want to. Here's another one I built. This relates to some stats from DeFi Llama that I wanted them tracked a certain way. It's the total fees of all applications on a chain. So I put this on my website, dashboard.dynamodefi.com, and made it so you can track it by day, week, month. You can do it for different time periods. You can do it 3 month, 1 year maximum, because this was a stat that I wanted to track, right? It's something that I found useful. And it's something that in at least this exact format I'm showing isn't really available other places. And I think this is a great way to spend your time right now. I mean, they always say like build in the bear market. Well, now you don't even need to be technical to build. You can use some of these AI products, which are getting incredible, to test out making some of your own websites. The only thing I will say I have not tried it for, and I know that a lot of people are understandably nervous about this, is actual smart contracts. And to me, I mean, I don't have any plans at the moment to use it for that. But in terms of these informational sites where maybe you're not asking people to deposit money, can be a great way to get started. Other things I've used it for was to build a Discord bot, which that one required some manual coding as well. But even if you're not technical, I think you could get a strong start with using some of these tools. The other thing I am looking at is stablecoin farming. So here is my recent stablecoin yield report in April. Published it on my Substack. You get a few of them available for free, and then to get all 10, you have to do the premium Substack. But there's a lot of stablecoin farms available right now. And so if you're just waiting for greener pastures, you may be able to check out some of these up and coming chains like Sonic, like Barachain, and earn 10 to 20% while maybe even qualifying for an airdrop. So that's another way you could spend your time, and that's at least going to keep you involved in the on-chain ecosystem as the market stays flat. Because what causes a lot of people to miss opportunities in crypto is not even that they don't, they're paying attention and they hear about something and fade it. Because right now there's like not that many narratives. The reason what causes people to miss things is they check out entirely, they get bored, and then the new thing starts. It's really small, and they don't get into it because they weren't paying attention, right? They didn't even know it was happening. Like think DeFi in 2020, for example. And I think there's a good chance that something new emerges over the next few years, especially in the peer-to-peer space, in the privacy space, in the real-world asset tokenization space. But it's going to look different. And getting back to my point earlier about altcoin demand, a lot of people have been burnt over multiple cycles now. And understandably, you talk to people who are not that interested in crypto about it. Many times they kind of have a bad first reaction because they think of scammers, they think of people losing money. And so I'm going to say boldly, people will always speculate. There'll always be speculation in crypto like there is in the stock market. But I think the Wild West era is mostly coming to an end now, or at least the frontier is much smaller. And you're going to see a lot more applications built and prospering, but they're actually prospering based on fundamentals. And you see some signs of that, right? You see signs of that in the stablecoin space. You see signs of that in the privacy space, in the real world asset space, even in the crypto AI space. But it's going to take time. It's going to take time for those to build up. And if you want to stay on top of those projects with strong fundamentals, be sure to like this video and subscribe so YouTube shows you more like it. Until next time, this is Dynamo DeFi.